Hey traders, Parker here with another video on sector rotation, where the money is going to. Charts ripping, Nvidia headline, bank stocks moving, healthcare stocks breaking out. Something important is happening in the market right now, and most traders are completely missing it. For months, this market has been dominated by AI, semiconductors, and mega cap tech. But over the last week, institutional money has started rotating into entirely different areas of the market: healthcare, regional banks, and retail, airlines, and even small caps. As we can see here on our sector rotation indicator, let me make it bigger. So you can see I have it anchored to the start of the year. Excuse me. And as I zoom in, you can see that XLE is still our leader. XLK is our next one, and then you have a scramble between those. While average sector average is 8.67%. And you can see the VIX is way down. You watch my previous videos, you can see the VIX was way heavily elevated. But you can see the S&P 500, the QQQ, on S&P, the NASDAQ, the Dow, the IWM, and small caps. These are all green. Then you start in our sectors, and you can look overall, and then we get into our extra sectors over here as well. But you can see the most dominant theme is still oil, semiconductors, and energy, and that's one of the reasons why XLK is up. But IGV actually woke crunk up this week in the beginning as well. Right now, I'm using my sector rotation, or the momentum length for the sector rotation, or relative strength indicator, is momentum of 10, and we can see where our leaders and our laggers are. So right now on that momentum scale, we have XLK and XLE leading. We have XLI, XLB, XLRE weakening, and then we have these lagging sectors: XLY, XLC, XLP, and then we have improving from our XLF, which is financials, healthcare, and utilities. XLU. So, and the biggest clue, Nvidia posted incredible earnings and the stock barely responded. Excuse me, that's usually not weakness, that's a signal that leadership may be broadening out. Today we're going to break down where institutional money is rotating, which sectors are quietly strengthening, what declining yields are telling us, and the setups traders should actually be watching right now, because this is exactly how many market leaders emerge. So we're gonna go to a chart of the S&P 500. So let me quietly hide this so it's not using as much data. And when we go to our chart of the S&P 500, the indicators I have on the screen is my my anchor VWAP. So you have the anchor VWAP, my 4x forward move average, and our precision range indicator, my signal indicator. And right now, if we zoom in, we can see where the S&P 500, I have my Fibonacci, that's a regular Fibonacci that comes on the Thinkorswim platform. And you can see right here, here's our new all-time high for the S&P 500, and we pushed back down below, and we came down to our monthly VWAP right here. This other dash line right here represents like a 10-day moving average, but you can see where our monthly VWAP started here. And you can see this yellow dot right here represents, it has a higher close, but selling was strong on this candle. So it couldn't make a new time all-time higher, and couldn't get out of the range, and it couldn't go any higher. So it seems like price is suppressing in this area right now, especially when dealing with the Iran war, oil, and a couple of different things are hitting our market as well. And you can see here's our monthly VWAP, here's our 3-month, here's our year and our 6-month VWAP as well. And then we have our chart VWAP. I'm looking at this over 3 years. There's our chart VWAP for 3 years. And then the clouds represents the 20, 21, the 42, and 63, and 84 move averages. And then this one big red line right here represents the 200-day moving average. Excuse me. First, let's zoom out and understand the current market environment. The S&P 500 finished the week up roughly 1%, staying near recent highs, and improved. Importantly, momentum indicators like the RSI and MACD remain bullish for the S&P 500. So if I go back over to this blank chart, which is not really blank, but anyway, I go back over to the blank chart. Cut on the MACD and these other sector indicators here as well. So this is my RSI sector power board rotation indicator. It just has different sectors. It's based off of RSI for all the different sectors. Here's the MACD V sector rotation power board, and here's just a regular MACD V for the S&P 500. You can see the S&P 500 is overbought territory. If I zoom out, you can see this is where we had our cross up above zero. You had to cross above its average here at the beginning of April, and then we crossed above in April. Then we started rallying according to the indicator on the 14th, and it just kept going up from there. But we're having some trouble continuing up. So that tells us that the broader uptrend is still intact, but the bigger story isn't the index itself. It's what's happening underneath the surface. The market is transitioning from a narrow AI-driven into a broader participation phase. And that matters because broadening participation usually creates healthier trends, more opportunities, and more sustainable upside. One of the biggest signals supporting this move is the decline in treasury yields, oil prices, and volatility. The 10-year yield pulled back 4.5%. The VIX dropped back into the 16 to 18 range. That combination creates a much more supportive environment for economically sensitive sectors. And once rates start easing lower, institutions begin hunting for areas beneath most from easier financial conditions. That's where the rotation begins. You can see right here, we look at the RSI, the TLT came down, gold came down, and Bitcoin is still down, but more so Bitcoin is a risk on indicator. But it took a little break as well. I mean, we can see the breadth with the RSI is kind of showing risk off right now. You can see the same thing, somewhat so in the MACD structure as well. You can see, where's the TLT? TLT is reversing, so it's coming down. So these reversing, these rallying. I did a video on my MACD V. You can, if you want a better explanation behind that, just watch that MACD video that I did, MACD V in video I did. But you see the healthcare is rising, financials is rising, and where's utilities? That was the other reason why I built that other sector rotation indicator. It's just easier to read than this. But technology is still number one, but it's overbought. The NASDAQ is an overbought as well. We can see our retracing. Same thing here for the S&P 500. It's kind of sort of retracing as well. But it's still in this positive area. Even though it went below its average, it doesn't mean that it's headed negative. So it's kind of retracing or pulling back a little bit. But we can see from my positive, my negative, the trend is weakening. And what else was in here? Financials is number 4. So you can see where these are all sorted as well. So I'm going to get these off, and I'm going to go back to my sector rotation indicator. Zooming back in, we can see where I have these better structured with the IWM, the VIX, and VIX is coming down. You can see that with this orange bar right here where it came down, and it's only up for the year 11.71%. And we go over here to the TLT, it's still down for the year 2.85%, but it did come up a little bit. Gold actually came down. It was higher, very elevated. Oil also came down as well, and the dollar it got stronger as well. So you can see the same thing in these labels as well. We're still technologies number 2, XLE is number 1 here, and it's still our leader. And we went through those labels. So I'm gonna quiet this back down again, and we're gonna go look at NVIDIA's chart. So let me quiet this back down so it's not using much data. Give me one. And this is our 3-year chart for NVIDIA. If we zoom in from the beginning of the year, you can see where it just stayed inside this, trapped inside this range here. It finally broke down, then it pushed up above here. Excuse me. But you can see right now it's testing this monthly VWAP right here. This, like I said, this dash line represents a 10-day move average, And you can see right now it broke down below that 10-day move average. So the momentum in videos it broke its upward momentum, but it's not bears. It had outstanding earnings and everything, but it's still above its 21 days, 42 day, and it's 63 and it's 84, and it's still above its yearly VWAP. It's still above its 6-month VWAP as well. So let's talk about NVIDIA a little bit more. The company delivered exceptional earnings, but despite the strong numbers, the stock still sold off. Why? Because much of the good news was already priced in. This is a critical lesson intermediate traders need to understand. A stock can have amazing fundamentals and still, if expectations become too elevated, and when leadership stocks excuse me, man, I should have cleared my throat. And when leadership stocks stop reaching positively to great news, reacting positively to great news, institutions often begin rotating elsewhere. And that's basically what you're seeing right here. NVIDIA stock basically came down and it's doing this 50% retracement off our precision range indicator here, which is factoring this low and this all-time high here. And plus, NVIDIA is almost a $6 trillion company, so it's going to take a whole lot more volume than what we're seeing here to actually move the stock. While I believe AMD is somewhere in a couple of $1 billion company, so it doesn't take as much to move it. Now, semiconductors are still strong overall. One of the ones that I use is XOXX. Is a iShares semiconductor ETF, and you see where it's pushing up. Those are some old lines from a gap that was made a while back. Let's clear that off, and let's zoom in from the beginning of the year. It was also trapped in this range as well with no man's land, but in April everything just turned around. So this is not a bearish breakdown, it's a broadening out process. The distinction is extremely important. Instead of abandoning tech completely, institutions appear to be reducing concentration risk, diversifying exposure, and expanding into new leadership groups. That's very bullish sign for the overall market. And you can see these semiconductors are still, they made an all-time high on Friday. So there's no need to abandon these. Just look for different ones. One of the ones that I was tracking was on. You can see I got a lot of lines on here, and this is one of the periods where it broke out. Let me remove that. It was one of the cheaper ones in the beginning, and it did the same move that all the other semiconductors did as well, especially pushing above here. There's some other semiconductor stocks out there as well, and it's breaking above, and it made an all-time high over here on the what day is that? May 14th. I guess if I zoom out, and this is my volume indicator, just saying sentiment is good on this one, and we could. It came down to its monthly VWAP as well. Got back above its 10-day, and it's pushing above. The white dot right there just represents the close was below the previous close, but buying on that candle was greater than selling on that candle. So it kind of gives you an indication of still bullish momentum. That's what you're seeing also on this candle as well. But you also got a caution right there as well, where you got a wide range candle. That's high and low. But the volume on it was below average. So it just gave you a caution, but the bullish signal was there as well. So one of the other ones that we were looking at was healthcare. So we'll go to XLV's chart. XLV. It's still somewhat so in a downtrend, especially from its previous highs right here, 160. I don't think that was an all-time high, but we're looking at it from a standpoint of 3 years. So it had made these highs up here, and you can almost look at it like a double high double high right there. And you can see where it came down below all these VWAPs as well. And it came down to these carryover VWAPs. These carryover VWAPs as if those VWAPs never did end. So this red one represents last year's VWAP. So last year's VWAP continued on, then this would be last year's rewrap from 2025. And that's what these red dash lines are right here. And you can see right here, here's our monthly VWAP right here. And it actually pushed above there, and it's probably has a good chance possibly of coming back to our current year's VWAP, our current 6 month and 3 month VWAP also up here. Well, that's a previous 3 month right there. And where's our current one? Probably right here with our 1 month VWAP right there. Got above its 200 day, but it's testing. Is this bottom of this cloud is 63. The top of it should be 84 average. And one of the reasons why I use those averages, 21 days roughly gives you a month. The 42 gives you 2 months. The 63 gives you 6 months worth of move average, and the 84 should give you somewhere in between the year and the 6 month. If I add it also has showing a bullish RSI and a positive MACD crossover and improving relative strength. That's exactly the kind of slow institutional accumulation traders want to spot early. So you can see right here, here's our RSI. We have an RSI rating, let me get the math off of basically 62.25, and then our MACD, you can see where it crosses over into positive territory as well. And these dots right here represent squeeze. These dark blue dots right here represents a low level, a light squeeze, and then we have a high squeeze with these cyan or these baby blue dots right here as well. So you can see where the squeeze kind of pushed up, and you can see where it's about to break out of our range, precision range indicator right there as well. So let me hide those. Just leave my volume indicator. Healthcare tends to outperform when rates stabilize, volatility cools, and investors want diverse growth exposure. And we're already seeing insurance and pharmaceutical names begin to outperform. That's not random. That's institutional positioning. And this is our chart for here. I'm going to leave my lines on there. I could probably get rid of this one. I think I was looking at it more so on a weekly aspect of where healthcare could possibly go. So these 52-week highs and lows. That's where those lines came from. And I guess if I were to actually put a fib on here, would I want to do it here? Probably not. But you can see where it kind of sort of did that 50% retracement right there. But we could possibly put it right here and see where it is on our daily. And we can see right here that and we can see from this recent high and this recent low that we're probably going to hit this 50% retracement, probably hit this VWAP right here. But that's XLV for you, and we're going to go to, let's look at the regional bank ETF, which is KRE. And you see where it's kind of sort of trapped in this range as well. We zoom out, we can see that it dipped right here, start pushing up right there in what is it, March, and it's basically just been trapped right here. It actually hit the 78.6 field right here, came back to 61.1, and then it's trading within this 50% retract, 50% on fib line, and then 38.2 right here as well. So right here, this kind of sort of could show accumulation, especially because our volume is starting to perk up again. But it needs to clear out this range as well. So another major development is regional banks KRE gained over 3.5% this week. Now, why does this really matter? Because banks are extremely sensitive to interest rates as yields decline. Leading activity improves, balance sheets pressure eases, and investors' confidence returns. The technical structure here is improving dramatically. We got a bullish RSI, MACD crossover, improved momentum. That's one of the clearest risk on rotation signals in the market right now. So let's check it out with the RSI and the MACD as well, just for the visual reference. You can see where it's crossed up on our MACD and crossed above 50 as well on our RSI. So, and while we're looking at that, let's go look at XLF, which is our sector financial indicator right here. We already had our crossover. We haven't had a cross down, but we are in this ranging. But with those yellow dots down there, there's a high squeeze factor as well. So let me pull this out, and you can see where the squeeze indicator right here is showing a very high squeeze right here, or a very tight, or tight squeeze. That's what you're seeing right here. And we're crossing above our average. So financials could be on the verge of a breakout as well. RSI, we crossed above, we were switching before crossing above 50, but we could have a very positive continues to have a positive RSI here as well. And you can see it has the same implications as KRE is trapped within that range. Let me zoom out a little bit more, and we can see our all-time high right here, and then you can see, well, that might not be the all-time high, but anyway, it's hitting these VWAPs as well, but it couldn't break above its 200-day move average. And you can see right here is where our previous range low is in this area as well, and our previous range high is here before it created this new range, and it's just ranging right now, as you can see right with our MACD indicator as well. So we're looking at a possible breakout, but it's retesting this yearly VWAP as well. So both of those things are good right there. And let's go look at our small caps, and that'll be IWM. You can see small caps, we look at it from this perspective, they were already leading the S&P 500. Where is it? They were leading the S&P 500 for this entire year, and I think they're still leading the S&P 500. So, well, no, they aren't anymore, but they were leading the QQQ and the S&P 500. But they're still green, they're still pushing above. Right now, Dow is the thing that's lagging, but the IWM was leading the S&P 500. If you watch some of my previous videos, you'll see that, where small caps were outperforming large caps. And we go back for the year, you can see we still have a bullish RSI back here. MACD and RSI. So, and our sentiment is green as well. It's been green ever since 413, and it only translated or transferred over back here. But anyway, let's show the MACD and the RSI. If I can zoom, get this thing right. So we look at it from this perspective, where we did have a cross down, but for our MACD, but it looks like it's rounding back up and possibly push back above its average. And this is the thing where it says it's retracing just because it crossed below its average and it's pushing above. You have a light squeeze in this area as well, so it could break out. RSI is positive, well, it's above 50, and this is possibly pushing positive for this for the rest of the month, or possibly into next month as well. So this would be the IWM. The Russell S200, it gained roughly 2.5%. This is another economically sensitive group that tends to benefit from declining rates, easing financial condition, improving growth expectations. But here's what matters most: this isn't a dead count bounce price action. The charts are constructive: higher lows, momentum improvement, expansion, participation. That tells us institutions are beginning to broaden exposure beyond mega caps. So I'll leave it like that. But one of the other things that's been showing up is the retail. If I cross back over here, we can go look at the XRT. Where is it? Here. We can go look at XRT. It should be down here. XRT. So it's actually coming above. It was red or bright red, but you see these darker colors saying is, hey, it's improving. So, but where is it up there? It's not in any of those categories. That's weird. XRT. Well, no, it's one of the extra ETFs, so it's not the part of the 11. So I shouldn't be looking at it up there. But for the most part, we look at it actually over here. We can see where retail is still negative for the year, 3.22%. But if I were to change this to what is the 1st of April? So yeah, 4/1. I think the month started on 4/1, and we leave everything like that. So on our sector, yeah. So this is just a different point of looking at things from the second quarter since April started. So XLK is our leader since the second quarter started. You can see what's in improving. You can see what's lagging. I have it on 10-day. But for the most part, this is what the market looks like from the standpoint of the second going into our second quarter. So VIX is way down for the second quarter. Semiconductors is still up. Oil is down for the second quarter. So let's go back to our chart over here. And this is IWM. XRT, on the other hand, you can see where it has a huge amount of volume coming into the sector. That's what these bright green and bright. So white represents over 2 times the volume. So, and this represents one deviation above. No, it represents. So bright green represents 2 deviations. Anything above 2 deviations of volume, it goes to white or goes to yellow. And we can see where it pushed above its 10-day move average, that dashed white line, pushed above its monthly VWAP, is getting ready to test its 6-month VWAP right there as well, and possibly go above there. But it made a high over here. Let me zoom out. So zooming out, you can see where it made this high right here, came down and pushed back above, and now it's trying again. So there's no guarantees. But the retail quality had a huge week. They had a great week this week, and they gained over 4%. And the rally, interesting. It had a divergence happening inside this group. Walmart struggled after earnings, but discount retailers like Ross Store, TJX showed strong earnings reaction and bullish breakouts. This is a very important market clue. Consumers are still spending, but they are becoming more price sensitive. That creates leadership opportunities in value-oriented retail names. Again, this is classic institutional rotation. And we're going to look at some Walmart real quick, WMT. So Walmart, after its earnings, it did drop, but it only dropped within this range. So it's trading within this range from really its last earnings. So earnings to earnings, it's trading within this last range. It did make a new high, but it couldn't break out of range. But a range indicator to break, the close has to break above this range. So this is our precision range indicator. So this could represent a buying opportunity in Walmart. You have it's below its yearly VWAP, but it came down to its 214 retracement. You can see the same place where it came down here, where it had an extraordinary amount of volume, but on the small range, the range of the high and low, it did gap down, but it's just something to be looking at or looking for. The MACD is bearish, the RSI is bearish as well. It could be going into oversold territory, as this predictive line right here could be possibly showing. So, so we're going to go look at some of the airline stocks, especially coming into the summer and travel, and this is Memorial Day weekend. So we'll look at Delta. Another surprising area showing strength is airlines. Suggest ETFs sharply outperformed industrials this week. Now, airline stocks are volatile, so traders need to caution here. But there are 2 major tailwinds. Lower oil prices, that's what we're seeing. The oil is coming down. Improving economic opportunity. Hopefully the war in Iran doesn't persist any longer, or they don't if Trump doesn't decide to start striking Iran again. Delta in particular is showing a constructed double bottom breakout structure, and when you combine improving charts with improving macro conditions, institutions began paying attention. And this is our range for Delta right here, and you can see where it kind of hit this double bottom from here to here to here. That could be almost considered a triple bottom, but you can see where it actually is trying to push above here. Or if you wanted to look at here, it's been your double bottom where it just started really going off since March. But it's above its move averages, above its VWAP. It did make another high, but it couldn't break out of this range right here. And the yellow dot is showing you that, hey, you got a greater close, but the buying was less than selling. You want to look at it. There's a lot of selling pressure on the candle, you want to say. So that's basically it right there. Just look for Delta, and we go to the Jets. Well, you see where it's rallying, the MACD and RSI. We go to the Jets ETF as well. It's still somewhat trading within its range, but it's got above its yearly VWAP here. And it could be, and you have a huge amount of volume right here as well, where it's pushing above. It's going to have to get back above this previous range high right here and really break out above there. So what traders, what should we be looking for the next coming up? One of the strongest signals this week was market breadth expansion. The percentage of the S&P 500 stocks above the 20-day move average surged dramatically. That's huge. One of the ways we can look at that is basically, I'm going to cut off all these. Well, I really don't have to. So Thinkorswim doesn't provide the information for the 20 days, amount of stocks above the 20-day move average, but they do for their 50-day, their 100, and their 200-day. If I put it in correctly. So $SPX 50. So looking at it like this, you can see where we're in positive territory. Anything below 0.30 is negative. Let me zoom out as well. So we really want to be up here somewhere in these 80s. So we look at I say above 60, but above 50 is good as well, especially with the amount of stocks trading above their 50-day simple move average. If you want to look at it from perspective of our MACD and our RSI as well, you can see where it's crossing back above its average, and the RSI is crossing back. It's still trending above its 50, heading into I don't want to say oversold for territory, but it's getting ready to cross into the 60 handle for the RSI. Bull markets require participation. That's not just the 7 stocks or the Magnificent 7 carrying these things. This tells us the things are getting better. Momentum is broadening, participation is expanding, and traders should start focusing on sectors rotation rather than chasing instead of AI names. Now, that doesn't mean AI is over, far from it. Semiconductors and software remain strong. Yeah, software is building up, especially if you look at it from the IGV. It's trending up, even though it's still in this downtrend. But you can see where it's coming up, and it went up to 94 this week, and it closed at 94. So that's one of the things to be looking at. But the market is telling us something important. There are now multiple pockets of institutional strength emerging simultaneously, and historically, that's a constructive sign for continuation. So here's the key takeaway: the market is no longer being driven by just one thing. Leadership is broadening, and the traders who adopt early to sector rotation tend to find the best asymmetric opportunity. Right now, the strongest things developing here is healthcare, regional banks, small cap, selective retail, and economically sensitive groups benefiting from lower yields. The goal now is not chasing hype, it's identifying where institutional money is flowing, where relative strength is proven, and where clean breakout structures are forming. That's where the highest probability setups usually emerge. If you enjoyed this breakdown, hit the like button and subscribe. I appreciate you guys taking the time to listen to what I had to say. I hope it's beneficial and helpful. One of the things I wanted to do before we go was to do a little scanning. I'm going to cut all those off, and we're going to look at this chart. I didn't mean to cut off the my volume indicator, but those other two, the RSI and MACD. So we go into our scan. I think I already have my scan set up. So this is just the technology sector right here. So I'm scanning with the scanner. I'm scanning all stocks and intersecting with the technology and information technology sector. So I'm looking for stocks above $10, but below $100. We can take that out, but they had to have a million in volume. Really, if a million volume is going to represent Friday, they have to at least have one share. And I took off my PE ratio just because. Really because what's the stock? OKLO and a couple of these other stocks, they don't make a lot of. They don't have any money. They don't make any money, but they still have trading opportunities in them. So I took off my PE ratio, but they need to be up at least 0.5%, 0.5% on the day. Close is greater than or equal to there's yearly VWAP. Simple move average 50 needs to be above 200, and the average ATR for the last day, or I think I got it set for 21 days or something like that. At least needs to be 1.5. So I hit the scan button, and we're just going to be looking for things in the information technology. You're going to wait for the scanner, and these some of the stocks that came up. And we have these seasonally bad stocks. So let me make sure I'm on the right season or right month. Some of the criteria are seasonality. I think I'm looking at 50 stocks. So those are the ones going to be seasonally weak. These stocks right here have less than 5 years worth of data, so they're not going to be in consideration for seasonality. So Dell, FTNT, so it's a software. All these are seasonally strong for the month of May. These are our precision range indicator on the day, on our daily, and Dell has a breakout, and it's 17% better, doing 17% better than the market. The S&P 500, and its change on the week is up 21.98%. So we went over to Dell. So we went over to Dell. You can see it had this huge breakout candle right here. So it had a wonderful day Friday. It has earnings, so it's a pre-earnings run. So I had earnings on the 28th, so it could be considered a pre-earnings run. So it's breaking out its precision range from here and here. And so that'll be your technology. Some of the other ones we were looking at was we're doing about we'll do energy. So we are looking at things from this perspective. Excuse me. And these are some of your seasonally strong ones for this month on energy. And you can see where its markets dip. And these are some of the ideas if you're wondering about different stocks. So we're going to go over to, what was the other one? Healthcare. We're going to scan the healthcare as well. And let's see, these are going to be your seasonally strong ones. This one's negative. I'm not sure why that's showing positive. I have to check that out. This one has less than 5 years worth of data. This one actually has a breakout. LNTH. Here's your breakout. Huge amount of volume. It had earnings back here on the 7th. And it's basically came back, retested the VWAP, and it's pushing above here. I think I looked at this one a while back, but that's why I have my line right there. But so those are some of the ones. Let's see. So regarding healthcare, we want to look at a couple of those. Let's see. I think we said financials. So we're going to select all financials, and let's Just let the scan run. So these are some of the financial sector stocks. So if you're doing it by seasonality, so GS is breaking out, and we look at it from the month of from the month of May. You can see where it's been breaking out. It's retested its VWAP a couple of times, but it's breaking above, and it's $1,000 stock. I guess I should have capped it there. But these some of the other ones. They're in the range. This one is trading above its range. TD, and it's breaking out as well. But this is going to be the end of the video. I appreciate you guys. And if you're interested in any of the indicators that I've debuted here on the screen, just click the link in below. To my Etsy shop. I wish you the best, and God bless.